Well, good morning. I'm Jaginder Rana. The topic of the day is growth of general insurance in India. The growth of general insurance in India. The general insurance sector of India comprises non-life insurance products such as motor, health, property, and marine insurance. The sector has seen robust growth in the past decades. India is currently the fourth largest general insurance market in Asia and the 14th largest globally. The general insurance sector's density grew 2 times from $11 in FY15 to $22 in financial year 2023, but its penetration still lags at 1.0% of the GDP as of 2023, signaling a massive upside potential as compared with the global standards. The general insurance business in India has witnessed an impressive growth over the past 2 decades, which has been fueled by the increased participation of the private players, improvement in distribution capabilities, and operational efficiencies. During 2023, the Indian non-life insurance industry underwrote a total direct premium of Rs 2.57 lakh crore, that is $30.77 billion, registering growth of 16.40 from 2021-22. Out of which 1.58 lakh crore was underwritten by 27 private sector insurers, including standalone health insurers, compared with Rs 1.3 lakh crore in the previous financial year. So the total premium underwritten outside India by the 3 public sector insurers stood at Rs 3,434 crores in 23. So the number of non-life insurance policies more than doubled over the past few years. The number of policies issued in India stood at 116.7 million in FY15 and increased to 301.8 million in FY23, registering a CAGR of 13%. This growth is due to the growing demand in a number of associated sectors, such as automobile and healthcare industries. The public sector general insurers held a market share of 38.42, while the general insurers in private sector put up the remaining 61.58. So the India's general insurance industry is projected to expand at a compound annual growth rate of 9.9%, increasing from $40.4 billion in 2024 to $57.3 billion by 2028. The general insurance industry in India has continued its high growth trend and grew by 13.2% in 2023. So driven by economic growth and rising disposable income, rising consumer awareness of health and other general insurance products, and robust regulatory reforms also supported India's general insurance industry growth. So the trend is expected to continue in 2024 and 2025. In fiscal year 2024, the industry is expected to grow by 11.2%, driven by personal accident and health, motor and property insurance, which together accounted for 93% of general insurance premium in 2023. So personal accident and health insurance is anticipated to be the largest segment, representing 39.5% of general insurance gross written premium in 2024. It is projected to grow by 14.5% in 2024, fueled by heightened health awareness and rising medical costs post-COVID-19. The personal accident and health segment is forecasted to grow at a CAGR of 12.5% from 2024 to 2028. The supportive regulatory measures are expected to further bolster personal accident and health insurance. In December 2023, the Indian government proposed the establishment of a healthcare regulator to standardize and regulate hospitals involved in health insurance, aiming to enhance health insurance penetration. The Insurance Regulatory and Development Authority of India also introduced the Bima Sugam electronic marketplace in March, intended to streamline the purchase, sale, servicing, and claim settlement of insurance policies, promoting transparency and efficiency in the insurance sector. Motor insurance, the second largest segment, is projected to account for 31.1% of general insurance gross written premium in 2024. So with a growth rate of 10.4%, this growth is supported by rising vehicle sales, which increased by 12.5% in March compared to the previous year, and a boost in disposable income. The government's vehicle scrapping policy implemented last 1st April 2023 also drive this market. The policy itself requires private automobiles beyond 20 years old whilst commercial vehicles over 15 years old to be scrapped. Motor insurance is expected to grow at a CAGR of 7.9% from 2024 to 2028. Property insurance, the third largest segment, is expected to hold a 22.5% share of general insurance gross written premium in 2024, with a growth forecast of 10.4%. The sector benefits from increased infrastructure investments, with the government's budget allocation for infrastructure rising by 11.1% year on year to $134 billion for 2024 to 2025. The property insurance is projected to grow at a CAGR of 8.3% through 2028. Liability, marine, aviation, and transit insurance, along with other general insurance products, is expected to make up the remaining 6.8% of general insurance gross written premium in 2024. So recovery in the economy and rising disposable income will continue to support the growth of India's general insurance industry during the next 5 years. Initiatives from the government and favorable regulatory reforms will help in increasing the insurance penetration rate in India, that is 0.98%, which was lower as compared to other Asian markets such as Japan 1.75%, South Korea 1.46%, Hong Kong 1.65%, and China 1.26% in 2023. So the growth in industry GDPI was strong at 15.5% year on year in FY 2024 to rupees 2.79 trillion. So the health segment witnessed the strongest growth, accounting for 50% of incremental GDPI of rupees 375 billion in FY 2024. With the rising awareness of health insurance and increased ticket size, further the strong growth in vehicle sales supported the growth in motor OD. For the incremental GDPI to remain strong in FY 2024 and 2026, with the industry GDPI to reach rupees 3.67 to 3.71 trillion by 2026. So with the high frequency and severity of the net cat events in FY 2024, the net loss ratio of the fire segment was impacted. However, considering the reinsurance and low retention in this segment, the impact on the overall net loss ratio of the industry was manageable. Profitability for private players remained strong, supported by improved investment income, which is likely to continue. Adjusted ROE for private players expected to improve to 12.7 to 14% in financial year 2025, with improvement in underwriting performance, combined ratio of 105.5 to 106.5% in FY 2025 over 106.5 to 107.0 and ROE of 13.0 to 13.5% in financial year 2024. And see, the PSU insurers posted a small net profit in 9 months, that is financial year 2024 over net losses in the previous years, driven by an improvement in the combined ratio and higher improvement income. So improvement in combined ratio was supported by the absence of the retrospective wage revision and the payment of associated arrears in FY 2024. ICR expects the combined ratio for PSU insurers to remain weak, but improving at 120.6 to 121.6% in FY 2025. Solvency for 3 PSU insurers, excluding New India, continue to remain weak at negative 0.58 times, excluding fair value changes on investment as of December 2023, resulting in sizable capital requirement. Private players, however, remains comfortably capitalized to meet the strong growth. So GDPI to increase to rupees 3.21 to 3.23 trillion by 2025. Combined ratio is expected to improve for private players. Capital requirement for the 3 PSU, excluding New India, estimated to be sizable at rupees 94 to 102 billion to meet the solvency of 1.50 as of March 2025, assuming 100% forbearance on FVCA. That is rupees 320 to 328 billion excluding FVCA. So the position of the industry, general insurance industry, is remarkable, because with a strong growth, the general insurance market is growing, premium is also increasing, and the road ahead is very strong, very favorable to the insurance industry. The Indian insurance sector has transformed significantly over the past few decades and has been contributing significantly to the economic development of the country. The sector is transformed from being dominated by a single player. So the steps taken by the regulatory authority are also in favor of the industry, because the rise of investment and premium volume is a good sign for the industry, and the growth of the general insurance sector is a good sign for the coming years because the insurance sector in India has played a vital role towards the steadiness and growth of the Indian economy. It has gone through significant transformation over the past few decades driven by regulatory reforms. So the adaptation of the latest technologies and the rising customer awareness, especially after COVID-19 pandemic, has established a strong base for the industry to flourish in the near future. So as per IRDAI, the insurance market in India is expected to touch $222 billion by 2026. Additionally, IRDAI has adopted a new mission of insurance for all by 2047 that is expected to increase the insurance penetration while ensuring the ease of doing business for the insurers. So the insurance sector in India is projected to grow the fastest among the G20 countries, with the total premium projected to grow at an average of 7.5% as compared with the global average of 2.4% between 2024 to 28. Despite the various challenges that the industry faces, they present an opportunity for the various stakeholders in the sector to innovate and expand the sector further. Thank you very much.